Welcome back to the Dividend Diplomats YouTube channel. You've got Bert and Lanny here to talk to you about how to become a landlord without being a landlord and collect that monthly rental check.
Yep, you don't have to unclog the toilet, you don't have to repair brakes, you don't have to replace that window that gets shattered by your tenants.
You don't have to replace the tires that I popped on Bert's car last night.
Wait, what?
I'm kidding. Smash that subscribe button.
Give us the thumbs up. Ring the bell blue so you get notifications every time we bring you a new video.
Yep, and so again, we're here to talk to you about an investment you can make to become a landlord instantly. And you can be a landlord of some of the biggest tenants in the world. We're talking Walgreens, 7-Eleven, Dollar General, Dividend Diplomats, Walmart.
Wait, did you just slip in the Dividend Diplomats?
Yeah, I did.
It's okay.
Yeah.
One day we're going to get there as that real estate empire grows.
Right. That Walmart, Dollar Tree, Dollar General, we're talking some of the biggest companies in the world pay monthly checks to this company.
Yeah, so what is this company? What is this mystery company that we continue to keep describing here? How would you like it if the company's established nickname is the Monthly Dividend Paying Company itself? That's right, it is Realty Income, ticker symbol O.
That's right. Gets pretty simple right there. Just look up the O and you'll find an OOO, monthly dividend income, baby.
That's right, Realty Income. They are known, and probably every dividend investor out there, every blogger we follow has an investment in this great real estate investment trust, or REIT.
Yeah, and if you haven't, caught on yet, this is a company that pays you monthly dividends.
Wait, we haven't said that enough yet, have we?
Right. Yeah, you could be, again, a landlord by owning shares in this company. Again, ticker symbol is O. They're trading at a little over $60 per share, and we'll do a little bit of a high-level overview of the dividend stock metrics using the Diplomat stock screener as best that we can, except a REIT changes up things quite a bit. So, Bert, what kind of is a REIT, and what are some of the facts?
A REIT is a real estate investment trust. This is a company that invests in various kinds of real estate depending on that REIT's focus. Realty Income invests in properties and they lease them to the companies Lanny mentioned earlier. There are also healthcare REITs that focus in senior living properties. There are REITs for all of those discount outlet malls that you have, Tanger Properties. There's Simon Property Group for all of your malls. So you can have a REIT that invests in a very specific niche. What makes them unique is they are required by law to pay out 90% of their earnings to shareholders. And all the dividends you receive are taxed ordinary income, which is different from other dividends where you're taxed at the capital gains rate. So those are some of the high-level major differences here between REITs.
That's right. Now, again, looking at REITs as well, you're really not looking at earnings, and usually it's the FFO or the funds from operations. So you kind of have to look at it a little bit different when you're evaluating a stock to buy that is a REIT.
So let's start proceeding through. Let's talk through some of these metrics of the Dividend Diplomat Dividend Stock Screener. As a reminder, the three metrics of our stock screener are to review the pricing metrics, make sure it's less than the market, the dividend payout ratio we'll take a look at, and then the history of dividend increases.
That's right. I'd like to actually start out with the Realty Income just became a dividend aristocrat.
That is
recently.
the main feature.
Yeah, 25 plus years. Check out what a dividend aristocrat is in our other video. But Realty Income has been pumping out, increasing in their dividend for over 25 years, and actually have a compounded dividend growth rate of over 4.5% over that time period. And you may not think 4.5% is that great, but typically REITs yield a little bit higher. And Realty Income on the broad spectrum is no different.
Yeah.
What is O's dividend yield?
Yeah, they're yielding just over 4.5% right now, which is lower for some of the REITs, but that's a great return for your investment, especially when the broader market's dividend yield is just under 2%. That's a huge return in premium compared to the just investing in a S&P 500 fund. The fun fact with the dividend growth for Realty Income, it's kind of a running joke that Lanny and I have. The dividend increases come in regularly. Every quarter you're getting a dividend increase from Realty Income. Sometimes it's a fraction of a share increase in their monthly dividend. However, it's an increase nonetheless, and you are consistently seeing your dividend income continue to grow with them.
When evaluating Realty Income, though, based on instead of earnings per share, but in the funds from operation or just in funds from operation, I would say they probably are slightly undervalued in the overall stock market, which is now pushing closer to 30. Realty Income is actually probably trading at around 20 times fund from operations, so give or take one there. But showing slight signs of undervaluation, but definitely a little bit on the higher side.
Yeah, and I mean, they're one of the few REITs that are dividend aristocrats. So if you're going to have a REIT that is trading at a premium compared to some of the others, this would be the one that takes the cake.
Now, the best part, though, about owning Realty Income is that when you own them, you're already getting a 4.5% plus yield on that investment. But then as a landlord or as a shareholder owning the stock in Realty Income, you're also going to be generating an increased of your income every year. And, the rate has been well over 4% for Realty Income, and I don't see any signs of that slowing down.
No, I don't think so either. That's what they've performed one of the better REITs in terms of tenants compared to some of the others. We'll put some article clippings in our reference section below so you can see how we're arriving at that conclusion.
And again, their ratio, I know Bert said they have to pay out 90%. The cool part is when you evaluate Realty Income, for instance, and that payout ratio on that fund from operations is below 90%, then in your mind, okay, they're going to be probably increasing their dividends still on a go-forward basis.
Yep. So just the high level, again, that was our dividend stock screener where they're trading at that multiple below the market. They were comfortable with their payout ratio, and we just love their dividend growth history and the fact that they are a dividend aristocrat.
The best part, though, is looking in every month, stretching your arms up, going into your brokerage account and seeing that monthly dividend check you get from them.
Yeah, consistent, growing dividend income stream. That is the name of the game.
Now, if you have any questions about REIT or REITs in general or on Realty Income, feel free to leave them below. We'll do our best to answer them. Obviously, go out to their website. You can see what their top 20 tenants are. I already named a few in the very beginning. This is just giving you an opportunity to also get in the real estate game, but as, an investor from a shareholder standpoint, so a lower cost of entry.
Yeah, no, it's perfect. We both own the stock. We both love the dividend checks that come from them.
Yeah. So again, we appreciate you for watching. Give us a thumbs up. Subscribe if you haven't. Do it.
Do it.
Do it.
Do it.
Do it.
This is Lanny and Bert from the Dividend Diplomats.
Over and out.